Okay, good evening. This is Uncle Pete's Wall Street Week in Review. I'm Uncle Pete. Welcome back. All right, so let's take a look at this week on Wall Street, March 14th, 2025. And we had the Dow closing at 41,889.19, down for the week 1,313.53 or 3%. The S&P closed at 5,638.94, down 131.26 for the week, or 2.27%. The Nasdaq closed at 17,754.09, down 442.13, or 2.42% for the week. And the Russell 2000, down 31.38, closing at 2,044.10, down 1.5% for the week. The bright spot is crude oil was down $5.94 or 8% since January 2nd. And the gold bugs got happy with gold touching $3,000 for the first time in its history and closing the week at 2,993.60. That's up $334.70 or 12.5% since January 2nd. And the bond ghouls, never happy, inched into the plus column with the 10-year Treasury edging up slightly to close at 4.32%. Okay, in the futures markets, the Dow, S&P, and the Nasdaq, we had a little late day rally today. However, the S&P finished short of its previous Friday low. Ditto for the Nasdaq. Let's take a look. This is the S&P right here. Here we got the Nasdaq falling short of its Friday low. Friday low for the Nasdaq was 19,765. And the Dow futures Friday low on the Dow was at 42,201. So the Dow fell far short and far short of the 200 daily SMA. Looks like the markets are still suffering from tariff fever and a fear of the R word, which is being spoken about. And it looks like the children in the Beltway are still not playing nice with each other, but instead hurling curses at each other. But at least they agreed not to shut the government down, whatever that really means, for a few more months anyway. Lucky us. So, where does this all leave us? Well, as if the madness in Washington wasn't enough, madness of a different kind is about to take over the country. The NCAA men's basketball tournament kicks off with the selection of 68 teams, is revealed at 6 p.m. this Sunday night. One thing for certain, it'll be a lot easier to pick winners on Wall Street than to achieve the impossible, that flawless NCAA bracket. But anyway, folks, it's Friday. Did you pay yourself today? You know what I say. If you want to secure your future, you need to be investing 15% of your pay every week into preferably an index fund or an index ETF, right? If you're starting out and you don't really know how to pick stocks, and why would you want to anyway, when most of the mutual fund stock pickers out there, the professionals, they can't beat the S&P 500. They can't beat the market for any great length of time. and you have to pay them a much higher expense ratio to fail to beat their index, or their benchmark rather. If they can't beat the market, why pay them more money than you have to pay just buying an index ETF or a index mutual fund? All right. But the big question today is Friday. Did you get paid today? If you did, I hope you paid yourself. All right. There's one thing Warren Buffett said. I know you're probably scared. Oh, the market's going down. It's the end of the world. Yeah. Go look at a chart of the S&P 500 for the last 30, 35 years. You'll find all the terrible things that happened in the world in that chart, and yet the market always comes back, right? So when the market is down and you dollar cost average, you buy the same amount of your fund or ETF that you do every month. When the market's down, you buy more shares. When the market's up, you buy less shares. When the market's down, your your dividend reinvestment buys more shares. When the market's up, your dividend reinvestment buys less shares. You don't care. In your long term 30, 35, 40-year portfolio, you don't care what the market does in the short term. It's providing you opportunity. And what I wanted to say was that Warren Buffett said, you make your fortune, excuse me, you make your fortune in a bear market. Get greedy when others are fearful, and fearful when others are greedy. Right? But we don't care. We just keep buying. Right? We'll see what the market is, where the market is, rather, a year from now. But anyway, it's Friday. Go pay yourself. Right? Do the right thing. Get your money working harder than you do. You worked hard this week for your money. Make sure your money works harder than you. Put your money to work. Go pay yourself. Minimum 15%. All right. Have a great weekend, and enjoy the March Madness coming up this week. I'll see you on Monday. Good night.